Welcome back to Time Freedom Daily. This is your spot for your daily of nuggets and building businesses, motivation, investing, crypto, everything else in between. Today is a crypto investing type of day. We're going to talk about a lot of things about that. It's kind of hot right now. It's a topic that's on everybody's pulse. So, Chris, how are you doing today, my brother?
I'm great. It's a green day. Your light is definitely green, so that's a good thing. And it's like you said, it's on everybody's mind. And I know everybody was thinking we were, in for this amazing November and this amazing December. And yeah, I still believe December is going to be amazing. But a big part of learning, like investing and learning charts, is stuff doesn't go to schedule. It's hard to schedule your gains. I mean, we would all love to be able to do that. And so we are just going to try and shine a little light on what's going on and help you guys understand it and kind of calm everybody
Absolutely.
down because it's still coming.
Yes, it is. All right, let's take a look at the charts real quick. I'm going to share my screen here. And right now we have market cap. It's kind of broken out of the kind of the stagnation, kind of the resistance, and we're pushing up towards $2.8 trillion again. Bitcoin dominance is down. Ethereum dominance is up. It's over 20%, which is strong for the altcoins. It means that Bitcoin is kind of trading sideways and giving some other projects the time to kind of catch up. We all know what's going to happen with Ethereum. At least I know. Again, this is not financial advice. This is not investing advice. And again, before I go any further, please make sure you like, you subscribe, and you share this video. It really helps us out, gets our information out there. We're just a couple of guys that are passionate about investing and crypto, and this is what we do. So it is nothing more than our opinions, and it's not advice. So with that, we have Bitcoin holding right above 58,000 and pushing up. It says it's slightly down today, but that's just on the hour. Over the 24 hours is up 2.5%, and same thing with Ethereum, but Ethereum is pushing as well. We are only less than $200 below the all-time high, and we've got I know, right? We've got Solana that's really climbing. It's up 7%, and I've got a story about that that may have shedding some light on why the Solana is pumping again. Cardano is up. Hallelujah. We've got a story on that right now coming up here in a little bit as well. But it's definitely underperformed. There's some things that are starting to or needing to be happening and that are not. They're just a little bit longer, which is kind of Cardano's MO. They're used to taking slow. And again, right behind that XRP, which is Waverton. We have some news that they're hopefully coming up with some type of solution for this ongoing SEC case. Whether it's a slap on the wrist, whether it's a fine. I don't know it's going to end up with a complete win for XRP, but anytime that you end the lawsuit and it's deemed that it's not going to be a security and it will begin to be able to trade again and goes relisting on Coinbase and Binance and all the other major platforms out there, we're going to see a huge jump. And there was a sale last night. It was quite a large sale, which dropped XRP by about 4 or 5% or 4 or 5 cents, which when I looked at it this morning, I said, you know what? I'm going to gobble up a little bit more. So I did. I bought a little bit more of my XRP, so I've got a little larger position today. And they're saying once it gets relisted, we could see a 8 to 10x. So we could see that go from $1 to upwards of $10. Again, this is just an opinion. It's not financial advice, but it's something that we feel pretty strongly about. Overall, the market is strong or stronger. We had that dip, that correction, but it was if you go back to the whole market, we talk about dips or corrections, it was the smallest one that we've had along the way. Why? Because more adoption is happening. People they're not getting scared as much, right? So their paper hands that went up in flames, 6 months ago are starting to be harder. They're starting to get some calluses on those hands, and they're starting to hold on to those coins, knowing that this is just a minor setback. So, that's the market right now. Chris, why don't you bring up the traditional markets?
Yeah, I can certainly do that. Let me change my screen. The traditional markets actually were looking good today. Where are we here? There we are. The Dow Jones is up 358 points. NASDAQ is up 200 points. The S&P is up 66. So the traditional markets are looking better. So they've everything's kind of recovered itself from all that news and the Fed news yesterday, and so yeah, everything's headed in the right direction, which is it's always good for markets in general, for investors in general.
Right. I mean, going to that, we're talking about inflation. We talk about, what's happening with the economy. The economy is as strong as it is because US is doing with printing money. And, they're saying that's going to taper, but me personally, again, I'm a financial advisor, I feel that we're so deep into it. How can we stop? If we stop and other countries stop, the global economy is going to collapse. So we have to continue to do what we're doing, or the government's going to have to continue to do what they're doing, maybe at a slower rate, but they're going to have to continue. And which, really tells me the cryptocurrency market is where we need to be. A lot of these coins are deflationary coins, especially Bitcoin, so we're against the dollar. Bitcoin is king. And it really is, it makes me feel pretty good that we got in and we're part, because I see the future and I see where it's going. So, what are your thoughts on that, Chris?
I agree, and it is learning. I was actually, speaking about time freedom. You guys know that we work from home, and after school yesterday, I took my boys to the park, and I was sitting there talking with one of the other dads, and we were talking about investing in general. And he went through divorce and kind of got into investing just so that he could kind of, stay with the times and help out his own financial situation. And he's familiar with stocks, not familiar with the cryptocurrencies. And he's like, I've been hearing so much about it, I really want to learn about it. And I said, yeah, that's where you start. I said, this is a year ago for me. I was still on the other side of the fence. I thought I was super skeptical. I didn't understand it. I didn't understand the supply and demand dynamic of a digital coin, like I do now. And so, yeah, and I kind of gave them a couple of places to start learning. And that's really it. Once you understand how it all works, and then you can put that understanding into investing and hopefully profitability.
Absolutely. For sure. Again, you got to start. It's just like anything else in life, a goal, you want to lose weight, you want to, feel better, you want to look better, whatever. The most important thing, start, right? And stick to it.
If you're fearing something, it's probably because you don't understand it. And so understanding it is often key. And that's Absolutely. Kind of where I was. So yeah, I agree.
All right. So we're going to talk about some news stories. What do you want to start with, Chris?
Well, I was just, while you were talking about the market cap, I did kind of want to show that. A couple of the things that we do talk about, let me bring this up just to show, is the market cap in general. And this is one of the screens that just I like. This is the market cap in general is right about 2.7 trillion. But over here, Bitcoin dominance is 41.2, which is kind of, it's where it's been. Ethereum dominance, which is the largest, if you want to call it an altcoin, is almost 21%. And that's big. That's on the way back up, which is really interesting. It means some of these other coins are having such a good run that we may see, as Bitcoin is kind of moving itself up a little bit, some of these other coins are growing really, really rapidly. This chart right here is the entire the total market cap of all crypto markets. We were in this big downward trend for days, ever since since November, really November 9th, November 10th, we've been in this downward trend. Just the last 2 or 3 days, we've broken out of this trend. We've broken out of the downward slide for total market cap. Once we break out of that is where you're going to see everything kind of run. There's that $3 trillion number, which we kind of bounced off of and then went down into this. Us breaking out of that, to me, that shouts that money is coming back in. We'll probably go rocketing right through that 3 trillion. That's where we're going to see those big numbers for Bitcoin, big numbers for Ethereum, big numbers for everything. So Absolutely. Just wanted to bring that up.
For sure. Good point.
And then, well, let me dive into a couple things. One of the companies that we both like is Riot. You're invested in Riot as well, I believe. So Riot Blockchain is a way, if you're just in the stock market, to kind of dip your toes into the cryptocurrency world. Riot Blockchain is a U.S. mining company. We've covered them before on the channel. They just made a big acquisition this morning into ESS Metron, which is pretty cool. They are a leader with over 60 years of experience in designing and producing highly engineered electrical equipment. They are mission critical to successful deploying Bitcoin mining operations at scale. So that is certainly exciting. It brought Riot up about 8% today, along with Bitcoin going up. But I wanted to just cover that in case anybody else is into Riot. And if you've never heard of Riot before, check it out. Do your own research. But I love Riot.
Absolutely. I've actually got a couple of options calls on Riot right now. And again, they're a huge Bitcoin mining companies based in the U.S. So it's good to see stuff being done here in the U.S. But the first one I want to talk about here is one of our favorite coins is Solana. It's a huge project. Right now, FTX, which is the new name of the stadium that the Miami Heat play in, is backed by one of the youngest billionaires there, and one of his favorite projects, Solana, and it's super fast. It scales super great, and it's just a very popular coin right now. And right now, Grayscale, which is the largest Bitcoin holder, largest trust in the world, when it comes to being able to have institutional money brought in, they have their large cap fund, and they're also going to be making its own Solana fund or trust. And right now, behind Bitcoin and Ethereum, Solana is now number 3 in their holdings in their large cap fund. So, it's look at that, $44 billion in their portfolio across the board. And, Solana is, we got a pump, it was up, like I showed you earlier, about 8% today. And, it moves because of this type of news. So, again, my opinion, I love Solana. I am invested in it, and I'm going to see where it goes. So what story would you like to go over next?
Let me I'll start with sharing this really cool lesson that I was understanding more this morning. I'll bring this up so I can show everybody on paper, because sometimes that's easier to understand. It's tax loss harvesting, and that does affect the markets, because not only are individual investors doing this, but the big holding firms, they do this actively, because for them, changing the amount they pay in tax can be huge. We're talking millions of dollars. So tax loss harvesting is basically the idea: if you have one asset and you've made gains, capital gains this year, and you have another asset where you've had capital losses this year, you can sell them both and use the losses from one to offset the gains of another. Now, to put this into practice, this was I pulled this example off the web. So the numbers are the numbers. I was going to change the numbers to something that might be a little more realistic to most folks, but I figured I'll just leave it here anyways. So this person had 5 mutual funds. Okay. So in their portfolio, they have Fund A, Fund B, and Fund C. Fund A has 250,000 in unrealized gains. They're still sitting there. Unrealized means that they haven't been touched. They're on paper, so he has $250,000 of gains sitting on paper right now. And then the other 2 are 2 losses. He has a $130,000 loss and a $100,000 loss. What they actually did this tax year, they sold Mutual Fund E for a gain of 200 grand. That fund was held slightly over 1 year. They sold Mutual Fund F for $150,000 gain. That was not held for a full year. Okay. So there's different tax brackets if you've held a capital asset for more than a year or less than a year. So here you go. So without tax harvesting, they sold 200 grand that had been held for more than a year. So let's say it's a 20% tax bracket. And the 150,000, which was held for less than a year, is a 37% tax bracket. So they would pay 40,000 in tax plus 55,000 in tax, making a $95,000 tax hit. Boom. Nobody likes that. With tax harvesting, and the idea is that they would sell, their financial advisor is suggesting that they sell mutual funds B and C. So these two up here that are the losses, sell this one at $130,000 loss and sell this one at $100,000 loss. Okay. So how that affects your tax for this given year is now you have 200,000 minus a 130,000. Those are both capital over 1 year situations. So times that by 20%. And this other one, both of these mutual funds were held within the same year. So both of those are timed at a 37% tax rate. So your about to be realized losses offset the realized gains for the year. Now your tax bill is 32,000. That's a huge difference, 95 to 32. Now you might be saying, well, yeah, but I just realized all these losses. Those were investments that were down anyways. You don't have to take that money right out and go spend it. You're not going to use it. You're not going to, the idea is that you're not going to go spend that money on a new house or whatever. You're going to take those losses that you just realized when you sell in mutual fund B and mutual fund C. The IRS says you either have to wait for 30 days to reinvest it in something very nearly exactly the same, or you can invest it in something materially different right away. So if those were stocks in the tech industry, well, maybe you invest in Ford Motor Company or something that is quite different. And that is something you should consult your financial advisor on. But I thought this was fantastic. And I think this really kind of explains it well. So if you want to dive a little deeper into that, pause the screen or rewind our video and kind of watch that again. It took me a couple times to understand it, but I was like, wow, that's, I'd always thought of it, well, you're selling a loss, you're selling a gain. How am I ahead here? But the idea is selling your loss, taking that tax advantage, and then reinvesting your loss into something else so that it can go back up. Hopefully, I was like, wow, that's beautiful. So hope that
Absolutely,
helps.
for sure. I love that. Love that. So again, obviously, with folks like you and me, I don't have those type of gains. So
Yeah.
just remove a couple zeros. That's all you need to
Yeah,
do.
exactly.
The math is the math. So with that said, I was going to share a story, but I really want to just kind of talk about investing in general and where to find the information. So I'm not a financial advisor. Chris isn't a financial advisor. I don't even know if financial advisors are needed anymore. And I'm saying that from my heart, from my own opinion.
Mm-hmm.
The people that are financial advisors, what did they do? Okay. They've learned how to read stocks and investment charts, right? Chris took a course, he now can read charts, right?
Yep.
They did have to go and study for their Series 7, Series 8, whatever it may be, to be able to legally advise you and trade. It's more legalities and stuff like that. But all of this information is available to us on YouTube or Skillshare or all these other platforms that are people that are going to give you a disclaimer that they're not financial advisors, but they're providing you with the information that you need for $0 or for a $14 class or whatever it is that you are looking at. So don't go and give somebody 2% of your money every single year when you don't have to. You just have to apply yourself. Tell me, talk to me.
The only thing I would say, and this is from my experience, there's one thing about taking a course and understanding the charts, but I have taken a lot of losses. I make them small losses as lessons. And so that would be the only one thing. And it kind of depends on, John and I love doing this. Like, I dig it. It's cool. I like looking at the charts. I like understanding what's happening. I'm aware of how to take a small loss and to limit my risk for a large potential gain. I know how to do that. But the only thing I would say is if you don't have the time or the interest, then maybe a financial advisor is not a bad idea. Pay 2%, so it's out of your hair. Probably a lot like the landscaping business. You can learn how to cut your own grass, or you can pay somebody that's going to do a freaking amazing job. So
Sure.
those would be the two sides of the coin.
Understood. Let me finish my thought there, and you'll understand where I was going
Yeah.
with what I was saying. So, financial advisors are out there. It's funny. I had a financial advisor. I had my money set with a company that I hired. They're my virtual CFO. They do my taxes, my books, and stuff like that with my multiple businesses that I need to do it. And they also offered financial services. They charged, I think it was like 1.5% as a fiduciary. I had two portfolios. One portfolio that he separated. I said, look, I want you to hold these. I don't want you to get rid of these yet because these are the ones that I'm really in love with, and I want to see how it goes. And then he had another portfolio where he took the majority of my money and he invested it. Okay. So the reason why I took my account back was because my account was up 10 times higher than his. So he did not touch any of the crypto, any of the trusts. I had the Grayscale trust, I had the Ethereum trust, I had Tesla, and I had Coinbase. Those are the four that were in my portfolio. And over the course of the year that he had it, my portfolio was up 67%. His portfolio was up 11% or 7%, something like that. And when I got it back and they transferred it back to me, he literally had like 100 different stocks. And it was like 1 share, 2 shares. It was almost like I felt like he was throwing a dart on a dartboard and saying, let me just see what's going to hit and what's not going to hit. And in the course of that year, he bought and sold, which there's no fees for that anymore, but he bought and sold numerous stocks. So over the course of the year, I could have had 150 or 175 stocks. My point is, if you just were to take your money and invest it in a stock market fund that charges you a portion of a percent, or an ETF that is on the S&P 500, or the top 100 companies in NASDAQ, you would have outperformed the financial advisor that was just throwing darts against the board.
Yep.
He wouldn't quite have outperformed me because obviously we're in a crypto bull market. So look, it was kind of a no-brainer. I felt strongly about it. You know how I feel. But my point is, I read a book by Tony Robbins about financial, just the financial things. I read another book by Ray Dalio. I read another book about, it says, how can you become a millionaire? All these books we can link in a future time, but they all said the same thing. Don't overthink. Invest in the market. Invest in funds that are low fee. And they're going to outperform 99% of every financial advisor out there.
I love that.
That is the truth. That's where I was going with it. I'm not saying that they if you've got all kinds of things that you need to do, and you're a multimillionaire, and you need to know how to hide your money and where to put your money and do all this tax harvesting and stuff like that that you don't want to do, then do that, right? But what I'm saying is, if you have a small retirement fund or an IRA or something like that, there's no need to pay any fees when you just stick it in to a fund and just let it ride. That's it.
Right.
The stock market has performed on average over the last 100 years. It has gained an average of 10% every year. So if you had your financial advisor doing the same thing and taking 2%, well, that 2% is now compounding against you on an annual basis that you didn't have to pay in the first place. So again, do your research, do what's comfortable for you. I just want to let you know that you don't need to overthink it. You don't need to go out and read charts like Chris knows how to do and pick a stock that you think is going to go, unless that's something you like to do. Because you can get burned. You can pick a winner that goes up 50%, but you can also pick a winner or a loser that goes down 25%, and vice versa. But if you got those simple funds that already give you all the stock market or give you the top 500 companies, well, they're the top 500 companies for a reason, because usually they're growing. Think about that. That's not rocket science. Save yourself on the fees and do your own due diligence, do your own research. Follow some of the top YouTubers They all will give you the same information about keeping it simple, and they may give you a stock pick here and there, and it may jump, and they may tell you to get out. But again, you're doing it on your own. This is your personal opinions. It's your personal money, but you're just following somebody that you think is smarter than you. So I'll just leave it with that.
I love it. Love it. You're right. Yeah. And like you said, I mean, follow smart people, follow Kathy Woods, ARK Investment, follow Jim Cramer. Like, I mean, they're all over the place. So yeah, I love that. Great advice, John. Anything else you want to bring up today?
No, man. Just, you know what? Just do it. Just get in the market. Just do it and get in long term. And look, time is your friend. It's also your enemy. If you wait too long, it's your enemy. But if you do it in soon enough, I'm telling you, we're going to do a stream where I'm going to show you numbers about how to get your kids an IRA and getting them invested with their own money and get a little nest egg before they're 25. And you'll see what it will do for them in retirement. It's unbelievable. It's going to be mind blowing, but we're going to come back with that in a few days.
That's awesome. Good plan. All right, you guys, make today amazing, and we will see you guys soon. Take care, you guys. Don't forget to like and subscribe.